Hey guys, welcome back. In this video, we are talking about another AMC short squeeze, the $2,000 pre-squeeze price, the margin calls incoming, and many more in this video. Firstly, I want to talk about this particular interesting article where it's talking about mark your calendars for February 2nd. Now, within this post, some of the things they've mentioned are quite bullish for AMC, which is why it's obviously surprising. Now, you can firstly see here, it talks about, additionally, its near-term relative strength index sits at about 38 at the time of writing, indicating bearish momentum is now approaching exhaustion. So whilst they've used the term bearish, they are actually talking about how that is coming to an end, obviously then flipping into the bullish momentum. Now, this is what we've said with everything that has been seen in these articles. It's quite surprising when you see an article that's talking about the bullishness of AMC, talking about how bearish momentum is actually stopping. Now, you could argue that they are still talking about the bearish momentum, but then the next thing in terms of what they talk about, which is finally, the possibility of another short squeeze makes up for an additional reason for high-risk investors to stick with AMC shares this year. Now, this one is a bit of a mixed sentiment for me because whilst they talk about another short squeeze possibility, they also regard this as a high risk, talking about high-risk investors. Now, the reason why I said this is mixed sentiment for me is because firstly, we're now seeing articles actually talking about the short squeeze potentials for AMC, which is something that has never been talked about before. When we talk about the overall articles we've seen in the past, which we have covered on this channel, it has always been talking about sell your AMC shares, talking about never buy AMC shares, and it's only talking about negative facts on AMC without any mentions of potential future returns, without any mentions of the investments about AMC. But in this case, they're talking about the short squeeze for AMC, and this is obviously a very fresh thing that we are seeing from these articles. And then, this is the however, is that they're talking about high risk investors. Now, when you take a look at AMC and you take a look at its current price, and we talk about the fundamentals, which we'll also mention later on in this video, do I believe AMC is a high risk investment at its current price with the current market cap, with how it's projected to be? No, I don't personally think so. I feel like we are already extremely undervalued. I feel like we have so much that is going to happen in this year, and especially with what AMC is doing, it's showing how actually it is relatively low risk in comparison to what everyone else talking about, and especially in terms of the returns that we could get. And so this is why I said that this article is very interesting, because it is talking about the bullishness of AMC, but there are still some mixed sentiment in there, perhaps trying not to be biased. Now, this is what we're also talking about in terms of AMC $2,000 per share pre-squeeze. Many will bail on inevitable holds that will be implemented, but only the strong survive. My first sale does not actually occur before $7,000 per share, and then we go from there. Not financial advice, just a peek into my intentions. Now, this is what we've seen with what plenty of apes have obviously talked about in the past, because one of the things that we need to understand is that $2,000 per share is equals to what we've talked about in the past with $200 per share, and we've already seen AMC reach towards those areas. And so, AMC could easily reach way beyond that. AMC has the ability to obviously hit way higher than that. And so this is something that we have to understand in terms of where AMC could go. We talked about how the real price discovery and excluding a squeeze for AMC should already be in the hundreds. But then when you factor in the fact that if there was no dark pool being used, if there was no holds, and we allowed the AMC to have real price discovery, and all of this is excluding a squeeze, we still could see AMC, despite it should be in the hundreds, but actually go to the thousands because of the sentiment, because of the momentum, the volume that will happen then. But in this case, we're seeing apes obviously talk about $2,000. And one of the things we have to mention is that there will be holds. We've already seen in the past how holds have affected AMC, how institutions use these holds for their own advantage. And so this is something that we should obviously be expecting as well when we do see AMC go up. Another reason why I believe that AMC should go into the hundreds, why we talk about the possibility of a short squeeze for AMC, is because you can see here, extrapolating Swedish broker data, there's some 3 million AMC owners in Europe and America. Even with only 2 million, an average of $400 worth of stock suffices for retail to own the float. The 2008 Volkswagen squeeze was caused by a lack of shares. Is CEO Adam's jumpstart about to begin? And we've already talked about this in the past before. It's essentially understanding how easily the retail can buy up the float. And it's why we said when we saw that there was over 50% of institutional ownership in AMC, we knew that that was not the case because the float has already been bought up. And to buy up the float of AMC is relatively easy in comparison to try and buy up the whole float of Apple, of Amazon. We talked about here an average of $400, and this is only with 2 million. There alone, we have 3 million shareholders. So it's actually even lower than that. And when you consider, we've seen there have been some retail whales in the community who owns tens, if not hundreds of thousands of shares of AMC. And so we already know that the float has been bought up, and more importantly, is bought up by the retail. The shares that we see that are floating around on the market right now, 9 times out of 10 are synthetic shares. But this is what we said with the lack of shares, with the demand for AMC shares to be there, to be increasing, and all these institutions want AMC shares, but yet the supply is not there. We are going to be seeing that squeeze is obviously what we are seeing here. You have to realize that retail bought 90+% of shares in 2021 and never sold. And this is what we've always said with the OBV. And this is why we said when we talked about the 50% ownership of institutions, we knew that that was not the case because we've seen how originally when the float was already bought, no one sold their shares and held throughout and is still holding on even till now. And so we know that institutions can't have bought up the shares when we own these shares. Furthermore, you can see here is that Citadel and Virtue can sell you AMC and all of these shares all day, but they never tell you who's the counterparty who sold it into your buy order. It's because they did. They borrowed shares to sell to you, but can't find a seller to exit their short position. So they seek a derivative to delta hedge themselves to appear flat on the books, as a promise in the future on their end to buy the stock from a counterparty, which they will never find. But Abe's willing to sell to them at astronomical prices, also called MOAS. And so we've seen when we talk about companies like Citadel, when we talk about companies like Virtue, who obviously have billions of dollars and they are holding onto these AMC shares, but they can't actually find an actual counterparty, so they're holding onto these for themselves. So when we talk about, are we going to be seeing AMC shares go into the thousands, tens of thousands when the squeeze happens? The answer for me is obviously yes. The reason for this is because of how much is needed to cover and how much is needed for these actual institutions to, settle everything. Yes, they can hide it in the books for now, but eventually that is going to eat into all of their capital. They won't be able to hide it, and that's when everything comes crumbling down. That's when these short sellers are obviously buying back the shares, and is why we've said that the MOAS can easily go into the thousands, tens of thousands, and even higher. Is why apes have obviously a high floor price because they realize everything that is going on. Now, earlier in the video, we talked about the fundamentals of AMC and how well it's doing. And what we can be seeing is how it's continuously improving. Adam Aaron said this: "We're delighted that soon we'll be showing in on our giant screens in more than 150 AMC theaters across the US daily NBC broadcast of premier Olympic competition from the 2026 Olympic Winter Games." So this is what we are looking at. Now, do I think that this is going to bring in, hundreds of billions of dollars for AMC? No. But is this going to improve the revenue? Is this a good start to something else that's even more important? Yes. This is something that is going to bring in revenue. And the reason why I think it's even a better thing is because we've already talked about how AMC wanted to expand into the sports industries, into streaming the sports industry. And so the very fact they have an opportunity like this, the very fact they are doing something like this, is taking a big step towards that. And you can only imagine how much revenue will be brought in if AMC were able to stream these college sports games, which for the people in America would obviously know how big that would be. And so this is something that I'm waiting for. And the very fact that they are able to do something like this already is a very good sign in terms of what they can do in the future. And aside from that, when we just take a look at what's happening in the box office, we can already see how Fire and Ash is still doing well and making 3.1 to 3.4 million yesterday, and back to in its fight for the first spot on its 5th weekend. So this is a movie that has come out in 2025, but yet it's still doing its numbers in 2026. And this is what we've said, there's going to be so many movies that will be released that will do extremely well, which I think a lot of people are ignoring and sleeping on. But it doesn't take away from the fact that this is what we've said. The fundamentals of AMC is going to be extremely good this year. We are already seeing this happen. It's why we've said that people who are saying that it can get to, to the hundreds, to the thousands pre-squeeze because of real price discovery, because of where it should be, is why I believe that is the case. It's why I said earlier, in terms of when they say that this is a high risk investment, I don't personally agree with that when you talk about how well the fundamentals of AMC is doing. Another thing is you can obviously see here, AMC previously stated more joint Netflix AMC cooperation envisioned in 2026 and beyond. What makes that statement even more powerful is that the CEO of Netflix also wants the 45-day theatrical window to remain if the Warner Bros. Deal goes through. And so this is what we talked about in terms of how many people want to work with AMC, how many people seize the opportunity with AMC. And so this is how we have to understand why I said earlier with the potential, with the projection of AMC. And so we are only going to be looking at AMC get bigger and bigger in the future. 2026 is definitely going to be an extremely pivotal year for AMC with everything we just talked about, but it doesn't even stop there. Firstly, when you take a look at the box office, we're already seeing, and this is very likely to be the biggest year in the history of the movie theater industries because of all the films that are releasing this year, but also how efficient this is. And we've already said, as long as the box office remains even the same as the previous year, we are still able to make profit because AMC themselves are improving their structures, are becoming more and more efficient. And so that's also something that you have to bear into mind. If you want to also see the growth, you can see what we talked about, how the box office brought even more money in, is setting records, and you can take a look at the comparison of what we just shown. You can see Jan 18th, this was Jan 17th. You can see the massive difference in gross. You can see versus 2025 in terms of the difference. This is only Q1 of the box office for AMC right now. You have to bear in mind, this has only been 19 days as of the screenshot, and we are already doing this well. And then now we're talking about the overall macro. Now we're talking about the world economy. When we take a look at here, margin calls incoming 40-year Japanese bonds above 4% is historically extreme. Now, for those of you who haven't watched my silver video for the last video, make sure you go check it out. I will talk about it as well in this video, but it's just a more detailed video. Firstly, when we talk about the Japanese bond, we're talking about the Japanese yen trade. We're talking about how this is going to be something that's massive. You can already see here, selling, the Japanese institutions are doing all of this. And what we're looking at is how this is going to have extreme stress. And you can even see here, silver squeezing, Japan's bond yields are hitting multi-decade highs. These are the exact conditions in which you will see someone lose their collateral or worse, implode. So we talked about this. Firstly, Japanese bond yield increasing. We talked about how that's going to affect the Japanese yen. And we talked about the Japanese carry trade and how that was the reason why a lot of stocks in the US are overvalued. And why, if that is go bad, we're going to be seeing hundreds of billions, if not trillions of dollars of value actually disappearing. And the people who originally used these collaterals to short AMC are going to see it disappear. And then what we also have is silver squeezing. It's why I said I highly recommend you guys to watch my last video on silver. But when you take a look at how well silver is doing right now, especially today hitting that new high of 95, 96, we are also seeing HYMC going up 21%. These are all very, very good things for AMC. Firstly, we have to realize is that silver, a lot of people who are shorting silver are the bankers. So as we see silver squeezing, these bankers are being affected. And these bankers have been the prime broker, the people who loan money out to these institutions who then uses that money to short us, to short AMC. And so silver squeezing is attacking the short sellers of AMC. Secondly, in terms of HYMC was up 20% for today. That is an extremely good return, not only for apes, but also for AMC. And we've already talked about this. If you're an ape and you've bought into HYMC, obviously congratulations to you. We talked about how some apes are talking about then rotating the profit into AMC. And so this is firstly going to add momentum for the bullishness of AMC, but then it's also talking about how AMC's investment into HYMC is also going to yield greatly. And that itself is obviously something that we need to look out for. You can see Bank of America, the prime broker of Citadel, also talk about this. They say silver is vastly overvalued, but retail demand could lift it to $170. And this is for silver. Now, we already knew that a lot of banks are short, and it could be very likely that Bank of America is extremely short on silver and are losing tens, if not hundreds of billions of dollars on these positions. And that's why they want to make it so that it's, and they want to make the whole sentiment for silver to be overvalued. They want people to sell their silver bars. They want people to sell silver to let the value drop. But we talked exactly about this. If these banks, so we're talking about banks like Bank of America, we're talking about banks like UBS, who are shorting silver, who are getting affected, but then who are also shorting AMC, when they get short squeezed by silver and they get margin called and they need to cover, they need collaterals, they need some sort of capital, they will have to also, sell other positions. But ultimately, that's going to affect their ability to suppress AMC. Now, in this case, Bank of America isn't shorting AMC, but they are supporting short sellers of AMC. And if Bank of America were to lose money, we could see them recall loans and put these short sellers in a position where they are facing extreme liquidity stress. And we talked about this in terms of silver officially rising above $95 per ounce for the first time in history as the historic run accelerates. I am extremely bullish on silver. I've already made it clear in the previous videos. We talked about HYMC, maybe not as early as some of the others. We talked about HYMC when AMC first bought into it. We talked about AMC. We talked about HYMC when it was at $3, and then we talked about HYMC. Really how good of a yield it could be when it went back to break even for AMC. So, maybe not as early as some of the others, but for a lot of us who did get into HYMC, we are obviously up very, very well. And that's what we talked about in terms of how we are in a very bullish time for silver. And then you're seeing here. So earlier we talked about, we split into multiple things. We talked about silver squeezing. We talked about Japanese yield bond. And then we talked about, all of these overvalued. And then you can see here is that the reason why the Japanese yen is still not yet crashing and it's not having an effect on the market, despite what we talked about the yield, is because of the intervention by the government. It's because of what they're doing. And had they not been, intervening, they are going to be seeing how what we're going to be looking at, all of these things come crumbling down. When you talk about how much is being used, when you talk about the Bank of Japan, rescuing the financial institutions with over 1 trillion Japanese yen, you start to see why everything's being delayed, why everything we talked about is not yet happened. Remember, when the Japanese yen carry trade happens, when the whole thing collapses, everything that we talked about is going to happen. The reason why it's not happening right now is not because everything we've said is not true, but rather because it's being delayed because the Bank of Japan is trying to prevent this from happening. And it's understandable why, but you have to actually understand what's going on. Another thing I find very interesting is this. NYSE to launch 24/7 US stock trading through new on-chain tokenized exchange. And the reason why I find this interesting is because it seemingly look like it's a double-edged sword. Firstly, with these on-chain tokenized exchange, now we've seen how they used it for AMC in the past, but we knew that it was not regulated. So yes, there are quadrillions of AMC tokens out there, but because it's not regulated, they are able to use it to abuse it. Now, if it was to be regulated, if it were to be launched by the NYSE, then theoretically these on-chain exchanges, these on-chain transactions will all be transparent. It will be essentially a CAT system that will happen for these trades that we can check whenever we want, however we want. And that is supposedly what it should be on paper. Whether or not that would be the case is obviously a different story, but this is something that potentially could bring transparency to the market. But the reason why I say it's a double-edged sword is because yes, it brings transparency for the retail, but it seemingly looks like they want to perhaps do this to bring crypto back up again. Now, this isn't me saying crypto is bad, but this is me saying and mentioning it because Bitcoin big liquidation time coming as GME AMC entering 2021 squeeze cycle all over again. And so the reason why I talk about this is because it looks like the collaterals that were used in crypto are now disappearing, hence why we're seeing AMC and GME having this setup. And we talked about how they're blowing up in silver as well. And so for these banks right now, for these institutions, the way for them to win, the way for them to actually even claw back would be for silver to go back down and then for Bitcoin to come back up. And so it's what I said with this, perhaps is trying them to bring volume into the crypto market as opposed to what is obviously happening. And then finally, we talk about this. Citadel version of a suit to kill payment for order flow when they didn't have it. Now it's that gold mine and they pay billions for access to it. Now, this is what we said. When these institutions say that they have the retail's, thoughts in mind, that they are thinking in the benefits of the retail, that is not the case. You can see here what we talked about. I don't even want to talk about it because we've already talked about it in the past before. Pause the video, read it. But essentially talking about the hypocrisy of these institutions, and it's what I want to give the warning of that these institutions do not care about retail, they only exploit the retail. Now, as always, this is financial advice, so do take out a grain of salt, make sure to do your own due diligence and research, and I'll catch you guys next time.